This chart shows you the volumes of crude oil and LNG that have flowed via the Strait of Hormuz from Gulf nations in the last 14 months. And concerning natural gas, you do see that the majority has actually been shipped from Qatar with 195 million cubic meters to nations like China, India, and also Taiwan and South Korea. And Europe is just making up a smaller chunk, and so you do see that Asia primarily is quite dependent on the natural gas coming from the Gulf region. But we haven't really seen that actually being reflected in American prices because obviously we do not really have America on this list here. But still, this supply shock that we're currently seeing has also led to this recent breakout out of this symmetrical triangle here at the Henry Hub spot price at the New York Mercantile Exchange, so in America. And we've also seen that this divergence that we've seen happening here, where cumulative volume delta has actually been trending lower and natural gas prices have actually been trending higher, we've seen that now play out in a convergence actually, where we've seen that breakout happening not only here at this symmetrical triangle, but also here at the bias aggression at cumulative volume delta. And so those technicals are certainly looking quite bullish. We are still moving in this value area where we've seen a lot of volume being traded. We've recently seen this retest of this resistance here at around $3.25. And so concerning the technicals, there certainly seems to be the potential for this to continue here to the upside, breaking above those resistances here. But whether this is actually about to happen, we have to validate that by taking a look at the fundamentals and macroeconomics as well. And so if you like this approach, don't hesitate to hit the like button, subscribe, and also don't hesitate to ask any questions down below in the comments if you have them, or just give us your opinion concerning the topic. Thanks for your support. Now let's continue with the weekly chart of natural gas to have a look at the macroeconomics that beautifully are reflected in the business cycles, the cycles that natural gas is typically moving in. And what you do see is here concerning natural gas that we've marked those last few tops with those orange bubbles and those last few bottoms with those blue bubbles. And concerning the last few tops, we've actually also marked the lower high before the higher high here, because we do actually have a quite interesting correlation with the stochastic RSI. But let's first have a look at something else, which is the divergence. Now, we tend to see divergences between natural gas and the gold to oil ratio. And that is primarily happening before those crashes hit. So, for example, here in 2008, we've seen that top play out in December. This is the .com bubble here. In December of 2000, we've seen that top here at natural gas, and primarily what we've seen happening before is that divergence, where natural gas prices have actually moved higher, as we've seen a gold to oil ratio that has actually been trending lower. Now, we've not only seen that happening here in 2000, but also actually here in 2002, in 2003 and 4, and here also in 2007. And so what you can see here is actually that we tend to see divergences. That means we tend to see the gold to oil ratio move down as we do see natural gas prices move up. And that historically always coincided to happen before crashes hit. And we've marked that here with those tops and those lows quite beautifully. And for example, also happened here in 2018, where we've seen that lower high, we've seen that higher high, and in between this time frame, we've actually seen a divergence occurring where natural gas prices actually started to trend higher again as we've seen this ratio to fall. Now, why is this actually happening? Because this is beautifully showing you the underlying sentiment that is currently appearing. Because whenever this ratio is actually trending downward, that implies that the gold prices start to outperform the gold prices. And whenever oil starts to outperform gold, that actually primarily or historically always signaled a bigger sell-off, a bigger crash. And we're seeing it happen once again right now, as we're seeing the Strait of Hormuz being closed or certainly disrupted because of the war. And so historically, it is beautifully fitting into the pattern that we are describing, and we might be able to shift this top that we've seen here recently a little to the future if we do see this continue, because we might just have some upside potential left. But to really put it all together, we like to take a look at the stochastic RSI now, because you can see that those tops here at natural gas obviously also occurred as we've seen tops here at the stochastic RSI. And those are not just any tops, those are tops that always hit this 100 level here at the stochastic RSI. And you can see that also actually play out like this throughout history, over and over again. But here recently, since 2013, we've actually also seen two retests with a lower high and a higher high that then ultimately led to a deeper crash. Now our actual thesis was that we've already seen those two highs here, with this high in February of 2025 and this high here back in January of this year. And so our primary objective was that this has already been the beginning of this sell-off. Now, we are currently seeing those oil prices obviously start to fall. We are seeing, this ratio to fall. We are obviously seeing oil and gas prices still rising. But as this ratio has just started to fall right now, we haven't really seen that divergence since then. And so if we want to see that divergence play out this time as well, we obviously have to have this bullish rally here to the upside once again. Now, this would obviously imply, if we do want to see history repeat, we have to have a bullish rally coming up right at this point here at natural gas, as we're seeing those oil prices obviously go down. And so we expect this actually to be quite likely. We expect at Chronos that this might be the start of at least a smaller rally here at natural gas. Whether we're actually going to have the momentum to actually hit a new high, that is certainly questionable, but we certainly believe that this could be the beginning of a real surge to the upside, as we haven't really seen in our eyes at Chronos, we haven't really seen a long war that certainly is quite likely. We haven't really seen that being priced in our eyes. And so even though we do not really see the American markets being impacted so much by the fact that we are seeing a lot of this natural gas being shipped to Asian markets, we are certainly having a global economy, and we are certainly seeing this inflationary pressure obviously also appear in the American markets. That it's obviously not certainly impacting the natural gas prices, but we are certainly seeing inflationary pressures actually spread around the world. Now, we haven't really seen those supply disruptions being priced into the natural gas prices in America, but we believe that this is likely to happen as this war continues, and the odds are showing you that the war is likely to continue for quite some time. Now, we have also seen that breakout here concerning the cumulative volume chart. We've seen that a divergence actually become a convergence, as we've always need to see it happen. And we have this saying at Chronos that that prices always follow quite beautifully cumulative volume delta. When bias aggression is breaking out, that tends to also lead to a breakout to the upside concerning natural gas prices. And so we at Chronos believe that there's certainly some upside potential in the short term, but we also believe there's a lot of downside potential considering the long run, because we believe there are going to be some deflationary pressures that we also already seen play out in gold prices and silver prices that we are yet to see happening to natural gas, and we expect to see history repeat once again. We might see some bullish pressure in the short term, but in the long run, we believe in a deeper structural sell-off concerning natural gas, as we've seen it happen throughout history. Now, I hope you enjoyed the video. If you did, don't hesitate to hit the like button, subscribe, and also check out our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.